I'm Keith McCullough, and welcome back. It's my privilege to have Carson Block. First time, Carson, that we've ever had a discussion here on the Livewire, so thanks for making some time.
Yeah, thanks for having me. Good to be here.
It's I don't know if I'm trying to make short selling great again, but like we said just before we went live, it's 2020, right? And I've been short selling for 20 years, so I'm like, I don't know if I'm considered an evil doer or anything like that. I do think that it's something that is just generally misunderstood. In particular, I don't like being lied to by people or taken advantage of. That maybe that's just me or the Gen X thing. You and I are about the same age, so maybe, I don't know, you got to be a little cantankerous. I mean, what is it about short selling that you love or think has an absolute part to play in this game?
Sure. Well, I want to first differentiate what we do from the traditional way of short selling, where you short something, try to get media interested in it if there's a salacious element such as management lying, but you're quiet. I started this really by accident. I did not know there was such a thing as activist short selling. I mean, there were probably only 2 or 3 people doing this at the time, 10 years ago when I started. But I would say that I'm doing this because I've always had a personality where I have a problem with authority. I was getting suspended frequently starting in elementary school. So I've always had a problem with authority, and usually that's been to my detriment. But when I came across, and so the first part of my investing career, I was a long-oriented investor. I wanted to believe management, and I got lied to several times. And this was happening in the late 90s, early 2000s. And I was not involved in internet stocks. I was working with my father. We were covering US-centric microcaps. And yeah, we were being used and lied to, not infrequently. And at the same time, the largest companies in the world were blowing up in their own fraud and lying and deception scandals. So that in 2002 pushed me out of the market. I said I wanted to be an investor, but I really need to understand how to better protect myself. So I went to law school, figured I'd go right back into the markets after I graduated law school, but I actually liked law school a lot more than I thought I would. So went to China, was a lawyer, started the first self-storage business in mainland China, was getting my ass kicked. I mean, I was just constantly on the verge of being destroyed. When my father got really interested in these Chinese companies that had listed in the US via reverse merger. And I didn't really care, but because I had my own problems, but he really wanted me to help him diligence these companies. And he sent me on this first one called Orient Paper. And prior to that, I had assumed that the issue would be the chairman is stealing too much money out of the company, right? Like I told my father, we're going to have to make a judgment call. What's a reasonable amount of money to steal? What's too much? But I was shocked because the company was actually a complete fraud. It had just reported $103 million in revenue. Real revenue was $2.5 to $3 million. So I didn't know what to do, but my father did not want to short. I basically had no capital left. And so as a side project, I put together this report exposing it as a fraud. And I don't really know why I was doing it. When I looked back on it, I looked at it and said, well, that's the power in feeling like you have nothing to lose. Like I had a shit business in China. If they took that away from me, it would have been like the best thing ever. So I just threw the ball as far down the field as I could. And it connected for a touchdown, basically. So, what then happened immediately afterward, I learned that this was systemic with Chinese companies. But, what really excited me was like, wow, like I can mouth off to people who are, much higher in status and position than me, and not only not get crushed for it or the adult equivalent of getting suspended, but actually get remunerated for it. So suddenly I have a profession where I can fuck with people and actually make money. So that's basically why I do it and why I still do it. So sorry, there's no clean nutshell there, but it really is an expression of my personality.
Well, I don't think there's anything to clean up on that. It's just the truth. I mean, and Neil Howe, who's our chief demographer here, he coined the term millennials. He always talks about like us as a generation this way, like we're just like we hate authority, and we're just like we've at the highest level. I mean, the stock market's crashed 3 times in my market life. I mean, no shit, I'm on the watch for bullshit. So whether it's trying to get my team to uncover, in some cases we have found frauds, right? I mean, we found Lin Energy. It was a donut, like as you call it. That's, by the way, it's one of the greatest handles on Twitter. The donuts handle, because we used to. When I started, Leon Cooperman owned it. It was like not only his number one hedge fund holding, but it was his number one personal holding, which made him like a page one holder as a person. So there's like a lot of glory in that too, right? Where you have. How about that part of it? Because it's not just authority to me. Like it's actually the received wisdom or the smartest money managers in the world factor. Leon's a great example. And I don't apologize for saying that I think he's full of shit on that. I mean, he was wrong. And is there that part too?
Well, I mean, it's really funny when you do what we do and you just see the dysfunction of how. I mean, billions and billions and billions of dollars are allocated. And so a good example is a company that we went short several years ago that actually kind of imploded before we went public on it. It was called Blinks PLC. And the financials were real, but it was defrauding its customers. It was listed in the UK on AIM. And it was funny because so the top holders were, Fidelity and another large long only. And we reached out to them before the stock collapsed. And we said like, hey, if you guys, I mean, there are indicia here. There are articles in Ad Age about this company probably defrauding its customers. I mean, what do you think? And they said, well, Goldman has a conviction buy on it. So we think they would have diligenced it. So then we actually managed to, through an intermediary, talk to the Goldman analyst. And the Goldman analyst said, yeah, like I know Fido's number one in this and so-and-so is number 2. So I assume they've done due diligence on this or they wouldn't be, the number 1 and 2 shareholders. So I'm okay with the conviction buy. And it's just like,
Are you
this
kidding
is
me?
totally fucked up and totally circular. But that's how the world really works.
Yeah. So what is it like? Now I want to get kind of into your process to the extent that you want to share it, because I'm assuming that like us, we get a lot of potential frauds. Now we got SPACs. We got a lot of stuff that's being pushed our way. Because the minute that we blow on it or slap a sell on it, which is we don't have ratings, we just say sell the fucking thing. I mean, it's like it's going to go to 0. That's a pretty straightforward call. Do you understand it? What is it like about your process? Like, what is your funnel? How do you come up with ideas?
Right. It's a combination of internally generated, and we're not running screens to come up with internally generated ideas. I mean, a lot of times it's just really sitting back and looking at what's hot, what's priced for perfection, and also what seems too good to be true,
right? And
scratching the surface. And a lot of the scratching the surface, I mean, we're really looking for, I'd say as much as anything, behavioral cues. And so initial steps could be reading transcripts from recent earnings calls and presentations. And if management seems to be really promotional, and then especially if they seem to be evading questions, then that's something that'll cause us to dig in deeper. Sometimes it starts with anomalies in the accounts that we notice, but the accounting analysis really takes a lot of time. So it's actually easier for us to look for the behavioral cues towards the top of the funnel. Now we also get, for lack of a better word, we get pitched ideas by funds that are already short.
Exactly.
And it's interesting because our business model is such that we bring most to all of our team to work together on a given company by the time we publish it. And and that allows us to go in far greater depth than pretty much anybody else has gone. So we do a lot of times find issues with the theses that we've been pitched. I mean, a lot of times they'll be directionally correct, but they thought this was a problem and it's not, but they missed this problem. So, but I would say that for our process, it takes us maybe 3 weeks to get conviction that, okay, XYZ is a good short. But that level of conviction is equal to what I think people would get, the level of conviction needed if you were at a long short fund and you've got reasonably skeptical people. But the trick for us is we have to be able to bring this case public. We are trying to communicate with the long holders. We're trying to convince them that they've overlooked things. And that is really where the bulk of the work takes place. So I would say our average cycle time to work through an idea, and there's a lot of variance here, but 2 to 3 months. So only about 3 weeks to get conviction, and then the rest is building the case. I call it market-based prosecution, usually when we go public with this.
Mm-hmm. That's interesting. I actually talk a lot about what is our cycle time on the research team. Like, I got 40 different people, right? But we have these sector heads, and it's like, how long does it take you to produce, like what we call them black books, but an actual presentation, like a deep dive into what is right or wrong about this company, fully vetted. That could, getting the idea right around inside of a month, but it can take, really 3 to 6 weeks of workflow to produce it in a way that you can actually, like, I don't want to do it unless we can put it out there fully, the whole bloody thing, including the model. And I think that should be the standard. Like the bullshit short selling that I see, no wonder we have a bad reputation. Like, there's not a real high bar in terms of how people have communicated their short selling process. I got Chanos coming on tomorrow. I don't think that he has a low bar. You certainly don't have a low bar. But the rest of these clowns, on Twitter that are like just pushing narratives around, it's garbage.
Yeah, look, there's a range, right? In the U.S., it's pretty funny because it's activist short selling is so common now. So you have all these guys who are basically screaming at the top of their lungs, metaphorically, on Seeking Alpha and Twitter. This is the worst company ever, and that they don't have, they're not given credence. So I think that there's a clear tier of activist short sellers who are taken seriously by the market. And that's, and largely the market ignores, I think, the rest of the guys.
Now, what do you think? And it's actually, for somebody who's an amateur short seller, but, has got a brain, that's kind of how we both got into it, right? It's not like it's something you're taught how to do. We both came to be. Like, I was a long short hedge fund, and I started in the year 2000, and shit was hitting the fan, and to keep my job, I had to be short stuff. So that's why I have that. We're all, in life, we're obviously products of our own experience. But again, it's a survival game, short selling in a lot of different ways. You watch it today, and somebody could be Carson Block of 11, 12 years ago, and immediately have read and watched, Nicola's management team or whatever the hell it's called, and said, this doesn't really smell right. Like, you don't have to, do you have to be you or I to actually come up with these ideas?
No, and the thing that made Nicola difficult and is really impressive about the work that was published by Hindenburg is Bloomberg had already published about Nicola and some issues with the demonstration. So, to be totally honest, we looked at Nicola after the Bloomberg article after the Bloomberg article, but before Hindenburg published on it, and we took a pass because we thought, there's no new news here, and
right.
And shame on us, we blew that one.
That one's nuts. Sorry, go ahead.
Oh no, I was going to say, so, I think it's a lot harder. It is a lot harder to break through and get noticed in the U.S. these days. If you were shorting stock in Europe, where especially in continental Europe, some people would probably want to impose the death penalty for activist short selling. You can break through in continental Europe, but they will also just steamroll you and run you through a process. And if you have the slightest error I mean, they will go after you in continental Europe. So, but that's an easier place to break in.
Yeah, I like that. I like the dynamics of that. I like to be held to the highest standard. You know, you learn a lot more by presenting the idea, or at least we do. I'm sure this is the case with you as well. I mean, I want the feedback. I know that we're not going to get it perfect, and there's a whole legion of questions that, you know, can still be answered with a short idea after that. But isn't it like back to this point on Nikola or whatever? I mean, it's like this is something I'm struggling with right now, which is there's a new community of what we would call 15 to 20% of the daily volume is at least uninformed or at least inexperienced, one or the other. We can call it whatever it is. Has that like made fraud in plain sight unshortable? And like you said, it was in a frickin' Bloomberg article. It was in a Hedgeye presentation. It's not like this. I mean, the thing kind of went down sometimes when we talked about it, but it didn't really implode like it did when it was finally, you know, slap the fun cops, you know, kind of enforcement on them. Is there something about this moment in time, particularly with SPACs and all the speculation?
Yeah, there's a lot to it, and I'm honestly trying to figure it out. I mean, this has been by far the toughest year of my career. Now, outside the U.S., particularly in Europe, I think it's much easier to get investors to care. But I think right now in the U.S., it's this bizarre euphoria in the markets. But I mean, like, to be completely honest, and this is so bizarre to say, but a few days ago, we were having an internal conversation about a company. It's a U.S. listed Chinese company, and it's a substantial fraud. And, you know, we're asking, should we go long and expose it as a fraud? Like, normally our reports start out by saying, and this is because we're required to disclose our position, Muddy Waters is short XYZ because it is a near total fraud. If it's a near total fraud, like, should we start it out? Muddy Waters is long XYZ because it's a near total fraud. This company has been a fraud since inception, blah, blah, blah. I mean, you know, like, we're having this serious conversation because it seems like right now, especially with these high beta names and these, you know, which most of the frauds would fall into that category, you get this chart where it's going to go down initially day one, but then it just, you know, algos come in and day traders. And so it's a really strange and frustrating situation. But if you look at some of the names we've been short this year publicly, GSX, that's a Chinese company. I mean, it's a company. I mean, the thing is, like, seriously, almost a complete fraud. And the market cap's like 30 billion now. I mean, we publicly shorted this at 35. It's at, you know, north of 110 right now. I mean, it's amazing. Like, nobody cares. Another one called Nanix, which is not Chinese. It's Israeli, recently listed. It's a complete promotion. There's nothing there. And yeah, it did that. So it's really strange. I mean, it's, you know, and I was talking about this with Jim Chanos as well. Just right now, does it matter if something's a fraud? And in the US, it seems like it doesn't. So why did it matter with Nikola? I'm still trying to figure that one out, to be honest. But yeah, it's a very surreal environment. You know, wrongdoers are not being punished at this point.
Yeah, there's only one other period, at least in my career, where this would have existed, and you didn't have to be a fraud. You could just be completely full of shit, like your company. It's not a business model, but it was a stock. You know, it doesn't mean like they believed what they believed. They weren't like willingly telling you what they didn't believe. It was just that what they believed was still a zero anyway. And that, you know, I think that's endemic to a bubble. Is that and a lot of people try to refute this, you know, bubble with, well, it's not the same valuations as 1999, 2000. It's like, give me a break. I mean, frauds and bubbles can exist in bull and bear markets. It's not like you have to have, but to survive as a short seller, you have to acknowledge that you're in a bubble. I mean, that's the only way that, you know, Carson Block's going to say, I'm going to put out get long one of my fraud is just that acknowledgement, and it's a reasonable acknowledgement, right? I mean, it's a survivor. It's a game that you need to survive to stay. If you want to be in the game, you got to survive. Is it not?
Yeah. And look, I'm not saying that we would actually do it but it's it's a sign of the times that this was a serious conversation. I mean, we want to take the company down, but recognizing the reality that the more you expose it as a fraud, I mean, so investor behavior, I mean, it's, I completely agree with you that this is reminiscent of 99, 2000 in terms of investor behavior. I mean, yes, there are differences, but I mean, just when you see, and look, a lot of this is obviously being driven by people working from home, being bored, having some excess liquidity. So, should the cure or vaccine be found tomorrow and we all return to the office, I think that'll do a lot to deflate the bubble. I mean, assuming, companies are going to want their workers to actually be working on work. But yeah, I mean, right now, it really reminds me of the late 90s.
I mean, I'm looking at this, I just pulled it up right now, this Nano X. I have no idea. Obviously, you do. But, where did you come into that one?
Well, that one was, this has also been, to say 2020 is a strange year is just a perpetual understatement. But one of the other factors that's been at play for us this year is, we're another firm that does what we do, Citron Research, Andrew left. And I mean, we're competitors. And Andrew was out there before we were on GSX. And I mean, we've been working on it for a couple months when he published. And Nanox, we've been working on it for a while when he published as well. So, maybe those dynamics impacted what was going to happen following our releases. But I mean, we were, I think we came public on Nanox a few days after Andrew did. So the stock had already come down quite a bit. We came public on Nanox, I want to say at about 30. And at one point it's down like 22%, and then I go back to my work. I see it's only down 7%, and then closed up like 2 or 3% on the day. It was, I'm just like, after the close, we're just stunned that this was the result.
Well, sometimes, I mean, I'm not going to, obviously I don't lie anyway, but I wouldn't lie to you in saying that I'm not quite sure sometimes, because I give actually real-time alerts short signals, I don't know if you've ever seen them or not. And during like March and April, it was like, I just hit a button, the thing would, just go, the right way. And it would stay the right way. Mm-hmm. And on any bounce, it would go back to the right way, back to the downside. And I liked it, it's kind of fun. When the VIX is at frickin' 80, obviously there's nobody on the other side. But now, it's almost like, I could guess who they are. But, people, as soon as they see, me lay out, I've just laid out these 3 different tech shorts. It's like, there's like literally in the last 3 minutes of the day, there's a bid on these 3 stocks. And what is going on here? Like, it's like literally, they want us to go away. They need us to go away. I don't think I'm being a conspiracy theorist. It's a volumetric, observation of what happens at a certain time of day in some of my shorts. It doesn't always happen, but it has happened. And I wonder, like, what is that? Is that a little algo? Is that like, is that a hater? Is that a troll? I mean, what is that?
Well, I mean, with GSX anyway, the Chinese fraud, I mean, I think that one goes a lot deeper.
Yeah,
and it's funny because you'd see it gets, it'll have these gaps up during the middle of the day. And then so many times after hours during the period when it was really running, you see these after hours prints, 50 shares, 100 shares, and then all of a sudden like $75 million worth of stock prints, and then 100 shares, 25 million of stock. So these are bot guys. I mean, that's the whole thing with GSX. It's supposed to be online education, but almost every single user is not a real person. And so, I'm wondering, I mean, how difficult would it be for these guys to set up, or people, associated with them to set up various trading accounts? And, in the old days, you used to just paint the tape, within the small circle. You can do it today too, I think. And, when we see these shares transacting after market, these huge prints, really chunky prints, like I wonder if that's just kind of reloading for the next day. So I don't know. I mean, there were also technical factors. There was a squeeze. I mean, it was, it wasn't an enormous float on the company. And then and you've got these massive swap positions that are sitting, that large banks are protecting the identities of their clients. I mean, I have an idea of who the clients are, and I think that they just intended to squeeze the stock. I don't think these guys are manipulating it, but I do suspect there are other people manipulating it. And in these large funds that have, are behind these swap positions, they probably anticipated that somebody was going to be manipulating it too.
Yeah, well, like you said, there's a circular nature to a lot of things, and this goes to the highest level. I mean, it's not like at 2 and 3 in the morning people don't see chunky prints in SPOOs. I mean, it's not like, it's literally you go to bed and then all of a sudden, sometimes I wake up and watch it a little bit initially just to pay attention. Like, is that really happening? Does the ESF really exist with $500 billion? And more importantly, do people just need to believe it exists and see those first couple chunky orders at a certain hour and have other people just ride it, So we just need to survive. Okay, so I think we agree on that. To survive, maybe one strategy, and I want to just kind of get into how you construct it. I think in a couple different interviews you've talked about the cash position that you keep. You can't be people that are amateurs at short selling. They think it's all in or out, and they're just they get their face ripped off. That's why they hate short selling. They have no risk management tools whatsoever. But if I were to only take Carson Block's shorts and put them on when the VIX goes through 30. Like, I think, I'm just looking at GSX and NNOX, that would have worked, right? Is there a volatility regime that makes your book, the book that you shouldn't have 60% cash, that's when you should just go? Should we just think about it in terms of volatility regimes? Because that kind of eradicates all the trickery and deceit that's going around behind the scenes when the VIX is in a place where anybody can make money on the long side.
Well, so in the prior 9 years, I mean, we've gone through some markets where there was record low vol, some markets where it ticked up a little bit. I mean, and the activist short selling strategy, had consistently made very good outsized returns. I mean, really high Sharpe ratio.
Yeah.
This year is different. I mean, there's some real. There are some major differences here, but it's one of those times when, we hedge almost everything with factors, but those factors are not capturing what's happening with our shorts. So there's a lot of idiosyncratic movement in these shorts right now, and I don't know. I mean, it's obviously partly dependent on volatility, but there are other dynamics that are driving this volatility that are different, as far as we're concerned, from prior vol dynamics.
Yep, I hear what you're saying on that. That's it's the answer is always going to be that it changes depending on what kind of market regime you're in. But I mean, the bubbliness of it all certainly makes this one as dynamic as it's arguably ever been. Let's go to some, if you don't mind, I'm going to get some questions, because a lot of these questions, like people, the first one I like it quite a bit. Vlad from Frankfurt. It might be not Vlad, just by the way, because his question is like, when was the last time shorting stocks actually generated alpha? That's like in the 2000s. Like he's kind of, I think he's insinuating that maybe this is a little dinosaur what we're doing here. But what about that? Like short selling doesn't work. I can tell you right now, I mean, I have every single short position I've taken at Hedgeye. There are thousands and thousands and thousands of them since they're all timestamped since 2008. And my batting average is over 70% of them. It's been working for a long period of time for me, more than it's not been working. And I wonder if you have a different answer to that.
Yeah, and honestly, that question might be better for Jim tomorrow. I mean, yeah. I do recall Jim saying at least a few years ago that it used to be you could generate 30% on the short side of alpha, and now it's down to 15, and that was a few years ago. So I don't know if it's down further than that as far as he's concerned. I mean, short activism has always generated positive alpha since I've been in the game and looking at it. I mean, it depends on who's short activism. If you go back earlier conversation, I mean, guys who are just screaming on Twitter about microcaps, I don't know about them, but short activism has always been a generator of significant positive alpha from what I can tell. And again, this year for our book, I mean, our book is not diversified. And so if you look at a couple of, just a couple of these positions, I mean, we've been out publicly on the following this year. Luckin, which was not our research, but we took a short, we published it. That basically went to zero. So a lot of alpha there. Second one we did was eHealth. And that has generated a lot of alpha and absolute return too. And we published that at the beginning of April. And that's gone down quite a bit while NASDAQ is ripped. GSX, massive negative alpha. Nanox, fairly recent, but I'd say, it's negative alpha there. I mean, it's, I guess you measure it against the NASDAQ. And then we did some tweeting activism or Twitter activism regarding a biotech promotion called Inovio, which is basically flat. So positive alpha, I guess, just by virtue of being flat. Mm-hmm. But, you can't buy a house without alpha. So that to us is a meaningless metric.
Have you tried to instead of using factor exposures on to hedge your positions, going bigger on that? Like a lot of the biggest net consensus position guys showed in futures and options contracts is short Qs. That's because every Tom, Dick, and Harry that's not only trying to this is generally what this is people are trying to hedge their gross exposure to 5 stocks or the NASDAQ. On the long side, they think they're hedged because they short Qs against it. For me, that's not how I do it. I'm just a naked short seller. So, what do you think about that in terms of factor exposures and things that you might start to think about differently?
Well, I mean, our mandate is not to be net long. I mean, Jim is running net long, and but that's not what we do. And again, look, I get that, that there are strategies that once worked and will not work for the foreseeable future. Maybe this is delusion, but I'm of the opinion that what's going on right now with short activism is a little transitory period where it's very tough in the U.S. I think non-U.S. markets will generate significant alpha, and I think it's at some point we're going to get some air let out of this bubble here. So I'm not ready to say, hey, we need to change this around and run net long. I think running market neutral in a short activist strategy should produce significant returns. I mean, that's I'm obviously talking my book, but at this point in time, I still am of that belief.
Mm-hmm. I mean, I run net short plenty of times in bull markets, and it works. It's fine. It's just when you go net short that matters. I'm talking about like more people that have a far less concentrated book than you, because I'm running 35, 40 positions in my personal book, and it's no problem. It's when you go short that matters. I mean, if you went net short at the end of August, you absolutely mercy crushed the crowd. I mean, there's tremendous alpha there, not even being right on your bloody shorts. You're just right on the market. So, that's another big thing here, Carson. You're wearing a bubble on the other side of your book. I mean, if you're running net short and you're still finding alpha, that's pretty impressive.
Mm-hmm. Right. Well, again, like for us, this year, I mean, I'd say we have so far not generated positive alpha. Yep. I mean, and obviously, if you look at position by position basis, as I did, it varies. But I mean, in general, this has worked through. Coming out of 2010, there was still a lot of risk aversion, and every year that's ticked by since, I think there's less and less risk aversion. And by the time COVID came around, I was fond of saying that investors had really become anesthetized to risk. Now, when I was sitting in pitch meetings a year ago, and people are asking, well, what markets, do you think this works in, or don't you think this works in? I said, look, I think we've got an excellent strategy for almost all markets except immediately post something like the financial crisis, or in a market that's significantly more frothy than we're in right now. And of course I said, famous last words, but I don't see that coming anytime soon. Do you? And here we are in that market. So I don't know that that'll sustain that long, but as I said, we have to adapt. We have to go to markets that are less frothy than the U.S. is. And, net, if that means we're still going to get kicked in the balls for a little while, I mean, that's life. We've had 10 years of putting up good numbers. So, we're still positive on the year. So it's not a total disaster.
No, I mean, the disasters, we know what those are. I mean, that's the Lynn Energy story, or Bill Ackman, activist on JCPenney at $40. I mean, that was the disaster of disasters. I mean, I prefer, like, if you're going to get kicked in the nuts, I mean, kick them back. That's another strategy, right? Don't just sit there and take it. I mean, there are guys out there that are pushing longs. Yeah, I think some of them are worse in his case, and I have no apologies to Bill on this. I think some of them are way worse than anything you've ever been accused of doing, or Jim Chanos, or any of my analysts for that matter, pushing the long side of garbage. In the case of Valiant and JCPenney, to name a few, against Bill Ackman. What do you think about that on the activism side the other way? Because we've seen a lot of problems. Some of them have just basically said, look, I just want to be a long-only fund.
Yeah. I mean, I've been talking for a couple of years about how I think society is suffering as a result of the amorality of investing. I think a lot of the bad shit that happens in society, like opioid overdoses, see Mallinckrodt's bankruptcy a few days ago. The lifeblood of a lot of these things is the capital markets. And at the end of the day, I mean, we as capital markets participants, most of us are accustomed to viewing things in an amoral way. If I think it's going to go up, I'll go long. If I think it's going to drop, then I'll sell it. And this has increasingly, I think, has consequences, especially with more leverage in the system, because it really skews incentives for bad behavior. Now, when you look at the guys who are long, say GSX, so GSX is a near total fraud, but these guys, they're long it because they think it's going to squeeze, and they look at it and I'm sure they say, hey, if I think it's going to go up, why shouldn't I do this to make money? My response is, there are companies out there that are not frauds, that are not fucked up, and are being starved of capital because capital is being allocated to pieces of shit like this. So if you want to step back and really think about the medium to long-term health of the capital markets, and since all of us are participants in that, maybe we should start thinking a little bit longer term and investing in ways that are going to encourage healthy development of it. But I kind of get the whole throwing in the towel element of it, which is like, look, man, I can't change it. I'm just gonna basically go with the flow. And when everybody thinks that way, the flow is going in the wrong direction. Mm-hmm.
Well, I think, you talk about the moral code associated with it. I just don't believe in pump and dump. I mean, on the long side, I think that is disgusting. You are pumping and dumping. You willingly know exactly what you're doing, and you are not talking about any of the risks associated with that. So, and then you get like kind of you put the caboose on the back of it, CNBC with Ackman, they'll give him a full 30 minutes on these things. Yeah, he's got some right. A certified, like, he's not like I was going to use the word certified monkey, not call him that. You have to be very intelligent to do what he does. He is brilliant, far smarter than I'll ever be, on paper. But the reality is that your batting average, if all you're doing is pumping, is going to be something hopefully better than 60%. But how do you have like epic strikeouts on names that, like, Valiant is disgusting. I think that's a great example of disgusting. There's no moral code to that.
Right. Well, I think, here's one of the things. I have gone and moralized at times about stocks and about markets. I mean, at times.
That's the first time I did, by the way, in a while. So thanks for listening to me.
Yeah, feels good.
Yeah, it felt good. Got it off my.
Most people are sitting there doing this to us. But, I mean, that's the reality, right?
It's so true.
But the things you have to be consistent. Okay, I am not ever going to go long a predatory shitbag company like Valiant. All right, so you lose the perception of moral authority, or you lose moral authority if you're willing to do that. So, my business is a lot smaller than it could be. I'm sure if I had been a lot more commercial about things and really looked to, use our brand and push hard, and, I think we'd be managing a lot more money. But I don't want to get anywhere near that gray zone where I'm, thinking, well, like I used to be a guy who stood for this and that, but, this is a lot of money I could make. Maybe I could just kind of bend it a little bit. Like I'm too much of an absolutist to do that. So I do think that if anybody is going to moralize, like I have, or, and you have to walk the walk, because people will remind you, laughingly, if you break that code.
Yeah, and they should. That's why I do it the way that I do it. I mean, I want to be told I'm wrong. I want to be told that I'm being inconsistent. I want to hold myself to account on those things. And if I can, what I'm really doing is reiterating the process, the principles of transparency, accountability, and trust. These are the kinds of things that it sounds like. I mean, you and I have a lot more in common than, not that I was looking for things in common, but us screwed up Gen X guys are set up to kind of have that anyway. But it's an interesting thing, and just to kind of wrap up here, I just want to thank you for that, because you absolutely could have done it that way, Carson. You could have become a monkey on CNBC and made your fund 10 times bigger by being ridiculous. And you didn't. You just didn't. And I think that's impressive. I mean, there are a lot of people out there in the world that I'm sure if they could just eliminate that kind of like negative intonation that they have when they hear short selling, and they just saw that, I think that you probably do have more fans as of this conversation. So thanks for having it, man.
Okay, well, but I'm sure I've had more middle fingers directed toward the screen as well. So,
well, I didn't give you one. Hey, if you want to get some more, by the way,
probably a 5-to-1 ratio of middle fingers to fans, but but I'll take it.
If you want to up that ratio to like 5 million to 1, like haters with, just why don't you write Bitcoin is a fraud? Why don't you try that on Twitter and see what happens?
Yeah, there you go. Fair enough.
I said I sold it. I mean, that was it for me. Thanks to Carson Block, and I'm going to buy it back. That's the whole thing about shorts, is that you can cover them and then you could sell them again. It's just this great adventure of truth seeking. So thanks for listening, and that's it for today. We'll see you back here tomorrow.